What I learned from my biggest trades. Hi, it's Charlie giving you today's video, and I'm going to be going back in time a little bit here, going through some historicals. I did a video just a week or two ago where I was talking about what I learned from my biggest losses. So it would only be fair to do a video on what I've learned from my biggest winning trades as well. So in fact, most of the biggest winning trades I've had have actually been in the last decade. So sort of going back to about 2013, 2014. So I'm going to pick a few of the bigger trades since then. And so why not before that? Well, before that, I did more trades which I always call like vanilla trades. So just nice trades, but just getting in, getting out at a given target level, which gives just a given normal sort of risk reward, 1 to 2, 1 to 3, on some of the trades, but sometimes 1 to 4. But what we're talking about here is those outsized returns, and those really came about, like I've said, since around about the last decade. Because that is where I really started to employ adding into positions once I got into them. So then when they get to their targets, they become much more outsized returns. And so I'm going to start off with this move down here in the September of 2014 in the Dow here. There was a funny thing with 2014. As far as the Forex markets are concerned, they started off all okay. And then we got into the Easter. April was Easter that year. And after the Easter, the currency markets went really quiet. So the average true ranges really came down. We were looking at like 35 pip ATR at times, or 35 pip ranges, 30 pip ranges, and I think the ATR got sub 40 pips on the likes of the euro dollar at that time. So from a very short term trading perspective, intraday at that stage when I was intraday trading, that was tough because it just was very, very small ranges. So it was the swing trading that ended up making me my money in that second half of 2014. And this trade that I shorted the Dow, it doesn't matter about the reasons why I shorted the Dow, but it ended up becoming an exponentially strong move because as the Dow came down, I was adding to the trade and exited somewhere around about there. Not right down at the lows, but it was somewhere in this range here. So what did I learn from that? Well, certainly, if you look at the chart here, there were lots of reversal candlesticks. If you're using candlestick analysis or whatever type of price bars you use, as you can see, there were doji reversals, engulfing pattern potential reversals, hammers, etc. Through this early phase of the trade. And this was a trade that I was taking with the community of traders that I was with at that time. Many of them are still with me today. And I remember at that time, almost every time there would be a reversal type candlestick or bar, someone would say, "Oh, Charlie, do you think it's going to go way back up now?" and at that time, I'm saying, "Well, yeah, it may well do," but I'm committed to my trade. I'm committed to my trade plan. There's a load of analysis that's gone into this, so I'm going to stay with the analysis. And of course, I'm looking at the charts again. Yeah, that looks like a pretty decent reversal. This one here looked pretty decent. I'd already shorted up here somewhere, come down a little bit, big reversal, then came down some more, and then this one here, this huge reversal here. Again, I was asked at that time, "Oh, Charlie, do you think that that's it now? It's completely engulfed this big down bar." It didn't look promising at that moment in time. Prior to, if I put this into real time, at that point, you're looking at the chart thinking, "That's it, it's over." Well, this is what obviously I was being asked, and of course, I'm going to look at the chart thinking, yeah, it could well be over, but I'm not going to jump out of my trade just because price has done this. You have to stay with your plan. And so my plan, my target was lower down. I had a specific reason, specific targets for the Dow and the S&P at that time. And so I have to stay with the plan. You can't allow yourself to get spooked out just because a piece of news, maybe it was an economic data release at that time, comes out that was positive, and the Dow and the S&P had these big up days. You just can't allow yourself to just be jumping around all the time, because then the following day we're back down, and then boom, 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 and then it got to target. So that, I would certainly say, is one thing. It's not really what I learned from that. It was just a reinforcing, and I'm using this as an example as to, okay, you can get price bars and all sorts of things going against your trade, and then your trade will still, in the end, work its way out. If it's going to go to your target and it stays and it moves with the overall piece of analysis, whatever your piece of analysis or projections are, if it's going to go there, it will go there by hook or by crook anyway, and you have to accept there's going to be retracements along the way. Now, another big winning trade overall would be 2020. So we'd just come out of all the COVID spike that happened earlier in 2020. Then this is on the euro dollar, started to spike or chop around, and then started to break up here in the May, and that was overall a trade that I rinsed all the way into the year's end. But again, what can we learn from that? And don't get me wrong, when I call it a trade, I was in, and then I took some profit here for whatever technical reason at that point, and did get back and then re-enter at this point, still holding on to a core position. But once we got into the late July, I was all out. So I was all out, and then during this period here started to build a position again, which I then ran into the December. So I'm calling it a trade, but it was obviously a series of trades, but it's the same piece of analysis and an ultimate target to work towards, which was up here. So what can I learn from that trade? Well, certainly when we go to the end of the year, I ended up, my final target was, I believe, 123. And we got into this period here, just before that down day there in December, it went down intraday. And I think that was the day that I banked the remainder of my profits off this from this point here. So I had a target at 123, but it just didn't quite get there. And so what I've learned, again, it did go there. So why did I exit? Well, there were some divergence type activity going on as we were coming into this high, and then we started falling away. So I thought, well, we're well into December now. Maybe it's time to just bank my profit and be done with it, because we're coming into that whole December period, and we might just do yet another pullback. And for the sake of whatever it was, 100 pips or whatever, it's a good trade. Overall, so it's not like I'm jumping out really early out of a trade, but nevertheless, what does it show me is that yet again, you have a piece of analysis, and so often, ultimately, price will go there. So what else did I learn from that year? That from a sentiment perspective, as we got into that period up here, the sentiment was getting very, very stretched. So, and what I mean by that is that there were lots of headline news articles talking about why the euro dollar was going to carry on going higher, why the dollar itself was going to carry on going lower. And so once you see articles in the likes of Bloomberg, Reuters, along those lines, you have to start looking the other way, because normally by the time the financial press are writing about something, it's probably too late. So from a sentiment perspective, it was yet another great example of that. As far as the commitment of traders reports, which cover what the hedge fund managers are doing, they had already started reducing their positions, their long positions, back in the summer. So it's a reminder that there was a lot of talk about their stretched positioning coming into the summer. So at that point, again, there was a lot of talk about, well, hedge funds are really stretched. They're at historic highs in their positioning here. Market needs to pull back. Market did a bit of a pullback, yes, and then carried on going higher even without them. So don't get me wrong, they were still net long, but they were less net long in that final run. So what does that tell us? You can't always time what the hedge fund managers are doing from things like commitment of traders reports. It gives us an overall view, but it's not a guarantee. Just because they've started to loosen up positions, they'd been quite rightly long, but they were still long into the end of the year. They were just less long, and that you can reach extremes in positioning as far as they are concerned. Yes, it came off a bit, but price still ended up going higher. So these are all lessons, if you will. I was using all this stuff at the time, but I'm trying to dispense some information to you here today from some of my historical biggest trades, because that was a fantastic year overall in 2020, because I just rode this overall trend. There were always stories and narratives going on through that year, and periods of indecision. This period here from when the euro really topped out through this sort of July, August time, it took really until, well, December before price actually broke out to new highs. But down here was the buy zone. But it was a lot of chop during that period. But we look back and say, oh yeah, that was the time to be buying. But you had to have some patience as well. So with most of the bigger trades that I've ever done, and I'm just cherry picking a few examples here, they require patience. And you don't have to be trading in the way that I'm showing you here today, where I'm in positions on some of these, not that long, but on some of them, these positions for a few months at least. And not everyone's going to want that, but it's all relative to the time frame that you're trading. Is having the patience to see your trade out to whether a designated target you might be using, maybe you use a trailing stop, and not overriding that. That's the important thing, not overriding it. If you get really close and you've got to your overall target and you're up a multiple of risk reward, and and it's got really close, like my example back here in the late December, okay, fair enough. You've still had a great trade and a great risk reward, so does it really matter? Not overly. But as usual, it's a case of staying with the trends or staying with your targets and with your overall plan. The last example I'm going to give you is back in 2018, which was again a euro dollar trade, because I trade the euro dollar a lot over the last decade. I do trade stock indices as well, but more often than not, I'm trading the currencies. Especially with regards to building the positions, and that's the key. These trades generally these bigger trades tend to be either that I've got a bigger target, or at least I've added to the positions as well. So, and I want to highlight again another trade here. And I'm just cherry picking 3 here today. I've got loads, but just a few. And this was a short in 2008, in the early stage of 2018. I'd actually been long through most of 2017. So we come into 2018. There were technical reasons to sell. There was a load of resistance up here, but also a load of divergences as well. So higher time frame resistance up in this zone, plus a load of divergences. So, but a bit like what I've just said about having the patience to hold on, sometimes you have to have the patience just to get into a trade. So I'd shorted somewhere here. Price came down for a few days, then came all the way back up. My stop was above that high. It came up just enough to take my stop out. So I've now been sat in a trade for what, a week, 2 weeks almost there, only to then get stopped out and then have to then re-enter because nothing had changed. Everything technically, there was a load of sentiment going on there as well. Again, a lot of euphoria at this stage. And so I needed to re-establish that position. And then fairly quickly, the euro dollar came down, but only for a week or so before then coming back up. And in my trading community at the time, once the euro started coming up, I was getting questions by people, oh, do you think it's going to come up and make new highs and, stop us out and whatever? Well, yeah, it might do. And that's what my answer will always be. Well, it might do, yes. But, if that happens, so be it. I get stopped out. All I can focus on is my plan. And what is my plan? Right, I'm looking to trade this down to a given level down here. And so my targets were down, right away down here towards these lows. And what was a good lesson from this trade was, in fact, it ended up just going sideways. I was in this position for 8 weeks before it finally started to break down. It just kept on coming down, then reverse, then come down, then a big reversal. At that point, again, people are going to be thinking, oh, surely it's going to come up to the upside this time. And no, it came back over again. So again, another lesson in patience. Now, and like I've already said, it doesn't matter if this is a daily time frame or this is a 4-hour chart and you're sitting in this for several days before it breaks down. The point is you have to have patience if you want to hold on to trades. And overall, that's my biggest learn, is that the way, for me at least, to make money in the long run is to hold on to my trades beyond where I feel comfort. Because what we need to do is to trade outside of our comfort zone. If I was trading in my comfort zone, I'd be getting into trades and banking them really early all of the time. But we know that that's not the way that the most successful traders trade. That's the way the masses out there want to trade, because they want to be in and out and do what? Be right about their trades. Oh, look, I made a profit on this trade. And they're doing it for themselves, not necessarily to tell others, but they need that high win rate. So what we actually need to do is embrace the uncertainty and take ourselves outside of our comfort zone. And I think I've got something here for you. If I just drag it over, there we go. Here's your comfort zone, and there's where the magic happens. This is just a generic thing. It's not anything to do with trading, but it's a good reminder of a given mindset. So for me, there's, and for you here on the back of this video, there's a few things to consider. Patience, not jumping out and about just because some candlestick or price bar reversals have come in. Stick to your plan as much as you can. Have patience. Sometimes you get into trades and they're having a great run. You just need to try and hold on. Other times you get into trades and they chop around, like in that example I've just given you as well. And again, don't allow the market to chop, just to fake you out just on a bit of a consolidation. So there you go. There's just a few examples of some of the things that I could say I've learned from those bigger trades over the years, and that they continue to reinforce my views on holding on to trades. The biggest trades are going to be, they're big for a reason, because you have to hold on to them and add to them as well. And that is difficult. That is outside of your comfort zone. But do you want to be like the masses, or not? That is the question for you. But for me, I would rather be outside of my comfort zone more often than not, because that is, for me at least, where the magic is. Hopefully that's been enjoyable to you. I'll see you soon.